The following is a presentation of TFNN.
Let's go to our first call of the day. We'll talk to John in Austin, Texas. How you doing today, John?
Way too good, Ken. I know I'm like a lot of listeners. We thank you so much for helping us to earn money in the market, and Mr. O'Brien also, and what you all do at TFNN. It is absolutely huge. Appreciate it very much. All the best to you and your family, man. I'm telling you, we so appreciate what you're doing. You do such a great job. This show is fantastic every day.
You're a good man, John. Really appreciate it. Thank you.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. I hope you're having a great Thursday out there. Welcome to another edition of Breakout Investing on TFNN. 877-927-6648. That's the number to use if you want to give me a call, talk about this market. Busy week so far and another busy day of trading today. You can catch Breakout Investing daily on TFNN from 3 to 4 Eastern. You can also pick the show up as a podcast on iTunes. That's easy to do. Just head over to iTunes and do a search for Breakout Investing. You can also listen to all TFNN programming on your smartphone now. Live programming 5 days a week from 9 a.m. to 6 p.m. Eastern. If you want to listen on your smartphone, just open your smartphone browser, type in tfnn.mobi. tfnn.mobi, and you can listen to the stream that way. And if you want to look at charts live right along with me, you can use Tiger TV to do that. That is available on the homepage of tfnn.com. Just tune into Channel 1. That's where the show is carried live, and it is archived on Channel 13. Tiger TV is also viewable on your handheld device as well. All right, let's start by taking a look at the NASDAQ composite here. Tech stocks under pressure today. We'll talk about the Google mishap in just a little bit, but we'll see the prior three trading sessions. The NASDAQ was working its way higher, actually reclaimed its 50-day moving average yesterday, is back below the line today. There is a little bit of juice behind the selling in the NASDAQ today. Looks like a day of professional selling. On the NASDAQ, volume tracking about 15% higher than what we saw yesterday, which was pretty decent volume at 1.73 billion shares. That was on Wednesday, so today we're tracking about 10 to 15% higher than that. Of course, the story of the day, I don't know that shares of Google have opened yet. I mean, it has been halted for quite some time. It was halted at $687.30 a share, down $68.19. So according to what I'm looking at here, it has not opened yet. So we'll check in, or maybe if you're listening out there and you may see it open quicker than I do, give me a call. We can talk about Google. But the stock was halted at $687.30, down about 9%. What happened was Google was supposed to release their earnings after the close today. The press release was mistakenly released by R.R. Donnelley, which is ticker RRD on the New York Stock Exchange. They're the people that handle basically the press releases for Google, and what was inside the press release was not very good news in terms of third quarter earnings. Very weak results from Google. Earnings actually down 7% from a year ago to $9.03 a share. The consensus estimate was for a profit of $10.65. So a big miss on the bottom line, big miss on the top line as well. Sales rose 51% to $11.33 billion, but that was below the consensus estimate of $11.6 billion. The cost per click rate at Google, which is basically the average rate that advertisers pay each time a user clicks an ad, the cost per click fell 15% from a year ago. So that was a precipitous drop, and I know analysts will be looking for a lot more color from Google as to why bottom line and top line growth was just not there this quarter. So Google really taking a hit. To see the NASDAQ down a little more than 1%, to see the way that Apple is trading. Let's take a look at shares of Apple. This is a challenged stock as well, sitting underneath its 50-day moving average here. Shares of Apple down another 2% today to 631.88. It rallied on Monday and Tuesday. It reversed on Wednesday, and it's trading near its session low again today. So a couple of headlines around Apple. And it was basically BMO Capital Markets analyst Keith Bachman lowered his estimate for iPhone shipments for Apple's December quarter by 4 million to 46 million units, citing supply constraints. He kept his rating at outperform on the stock, but lowered his price target to $730 from $750. So not an ominous downgrade from BMO Capital Markets, but just a cautious note from Keith Bachman. Yesterday, Janney Capital Markets analyst Bill Choi said he expects 15% cannibalization to current iPad sales from the iPad Mini. Gene Munster over at Piper Jaffray puts the cannibalization rate at possibly 20%. Choi projected iPad mini sales of 6 million in the December quarter. Munster is looking at 5 million. So no matter how you slice it with Apple, you are dealing with a stock where uncertainty seems to be growing by the day in terms of fundamentals. Will demand be strong for the iPad mini, which is supposedly going to be unveiled next week on October 23rd? Yes, but is it going to cannibalize sales of the normal iPad? What about iPhone shipments? What about these supply constraints that BMO Capital Markets was talking about earlier today? Is the company going to be able to execute as well as it did when Steve Jobs was running the show? There's just uncertainty everywhere around Apple. I'm actually happy to have taken profits in this name several months ago. I just think the risk outweighs the reward here. Tech stocks looking very vulnerable. How about shares of IBM? You know, IBM took a hit yesterday, thinking that the 200-day moving average would be a support level here. Look at IBM. Just takes out the 200-day line with conviction today, down another 3% to 194.69. This was a $210 stock on Tuesday. It is now around $194, $195. So selling in IBM continues today. Check in on Google here. We just talked about Google, but the stock is still halted. There's some collateral damage to the news from Google. Shares of Yahoo, somewhat similar business. Yahoo down 8 cents to 16.01, so not too bad a decline in Yahoo, but well off its session high of 16.24. Check in on Facebook, which actually is reporting earnings next week. Facebook looking troubled here as well, underneath its 50-day moving average for quite some time. Looks like its resistance for now. The 50-day line for Apple is at $20.31. Shares of Facebook taking a hit today, down 4.2% to 19.05. And again, earnings from Facebook due on October 23rd. EPS is expected to come in at 11 cents a share, flat from a year ago. Another quarter of decelerating sales growth is expected at Facebook. 1.23 billion is the revenue number. That would be up 29% from a year ago, but sequential sales growth has been slowing for several quarters in a row at Facebook. Talked about kind of uncertainty at Apple. Facebook, there is uncertainty in spades at this company as well. Taking a look at crude oil today, $92.10 a barrel. That was the official settle for crude oil, down 2 cents, not much movement. Gold for December delivery fell $8.30, 0.5% to $1,744.70 an ounce. There was news out of China early today that third quarter gross domestic product came in at 7.4% for China's economy. Not bad growth by any means, but nonetheless the seventh straight quarter of slowing growth. Of course, the debate in China, will it be a soft landing for the economy? Will it be a hard landing? From my perch, looks like things are in order for a soft landing for the economy. You're not talking about an economy that is looking at a precipitous slowdown here, just gradual slowing. China is taking steps to make sure it's a soft landing for the economy. So that 7.4% GDP number from China, not too bad, really. U.S. dollar index up today to 79.31. Still, the U.S. dollar index is technically challenged, in my opinion. It is up about 30 ticks today, but still really not showing any signs that it is ready to move higher. It was working on a 2-day losing streak, actually down 6 out of the past, or 5 out of the past 6 trading sessions. It is rallying today, but as I mentioned and have been mentioning, that significant resistance for the U.S. dollar index at that 50, 80, 75 area. We'll see if it can get back above that, but from here, looking at recent price and volume trends in the U.S. dollar index, its downtrend is still intact. That is the bottom line right now. Yield on the 10-year note today, slightly higher at 1.82%. Same with the 30-year bond, slightly higher at 2.99%. Taking a look at some earnings reports today. Mellanox, a big loser. We've been talking about Mellanox, right? Talking about that chart that really wasn't looking that great. You know, breaks below its 50-day moving average, starts to live underneath the 50-day moving average, starts to look like resistance. Shares of Mellanox down 20% today to 78.62. Hit an intraday low of 75.51. Mellanox is a fabless chip company. They're a chip designer based in Israel. Earnings were up 303% from a year ago to $1.37 a share. Big beat. Estimate was for $1.13. Sales were up 130% to $156.5 million. That was also above the consensus sales estimate, but its guidance for the fourth quarter was disappointing. Mellanox supplies interconnect products for computing, storage, and communication applications. Broken stock here, still holding above its 200-day moving average at 67.62, but a lot of big sellers in the stock yesterday, big sellers again in the stock today. Here, this 50-day moving average for Mellanox, if you're watching on Tiger TV, you can see how it fell below the line in September, had a hard time getting back above it. Another tech name out there that is showing similar action is a lot communications. You can see the break below the 50-day moving average in late September, rallies back above. Now it's sort of living underneath. This tells me that a trip to the 200-day moving average is possible, down to around the 23 level for a lot. Right now, shares trading at 24.91, down 1.8% on the day. But another stock here that technically looks a bit vulnerable. Also on the earnings front, Align Technologies. They make the Invisalign teeth straightening system. Horrible day for this stock, down 24% to $26.76. Earnings just were not up to snuff. They missed by a penny on the bottom line. Sales were below expectations as well. So tough day for Align Technology. Long stock down 24% in one day. Ouch. All right, folks, stick with me. We'll be right back. Breakout Investing on TFNN.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pezzamento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. 877-927-6648. Checking in on the Financial Select Sector Spider Fund after early strength. It hits an intraday high of 1639, just off a swing point of 1644, I believe, was the swing point for the XLF. But right now it's just down a penny to 1628. Let's head over to Rick in Orlando. Wants to talk Morgan Stanley. How you doing today, Rick?
I'm doing fine, sir. Thanks, Ken, for taking my call.
You betcha.
Yeah, instead of a breakout, I'm looking for a breakdown in Morgan Stanley here. It looks like it's got a nice situation going for that, to short it.
Yeah, pretty bearish price action by Morgan Stanley. A bunch of financials have been reporting earnings. We heard from Goldman and Bank of America yesterday. Earlier today, it was Morgan Stanley. Nothing special in that early in the earnings report. Good technical setup ahead of earnings. The numbers needed to be great, I think, to bring new buyers into the stock, but they weren't great. You know, it was lukewarm at best, it looks like to me. So what you have here is a heavy volume reversal after hitting an intraday high of 1857. It is now at 1781, right at its session low, and you got a bunch of volume in the stock today. Morgan Stanley normally trades about 21 million shares a day, and you're already at 42, 43 million.
Yeah, so, hopefully that's mostly on the downside, because he looks like he's The previous day, he failed the September, 14th shooting star there. He failed that.
Yeah, September 14th. So that was the high there was 1850, which would have been the swing point, and you had a little bit of it closed near its high. It closed right at that 1850 level yesterday, and volume expanded a little bit. But yeah, I mean, its price action today tells me it's very, very volatile. So I mean, it's definitely not a stock to be going long here with the big sellers that are in the stock today. Looks like there's pretty good support at that 1650. So I don't know that you're going to get an extended breakdown here, but its price action tells me today that it's probably not going to break out anytime soon.
Oh, good. Oh, good. Because intraday also he's making a beautiful ABC down.
Yeah.
So if we'll continue that, I'll take a shot and do it to it here.
Hey, sounds good. Sounds good to me, Rick. It's got my blessing.
Thank you, sir. Thank you very much.
All right,
it's sure to work now.
I hope so. Jeez, now the pressure's really on. All right, Rick. Thanks.
No problem. I'll call you tomorrow.
All right, take care.
Bye-bye.
Bye. Yeah, well, I mean, if you're looking at Morgan Stanley and saying, bullish price action today or bearish price action, you've got a heavy volume reversal and big sellers in the stock. That's all you need to know. So Morgan Stanley right now down 68 cents, 3.7% to 1781 after a very fast and failed breakout try over 1850. So yeah, a lot of these financials were really setting up nicely. Just because they're setting up nicely isn't a sure thing that they're going to try to break out in heavy volume. You still have Bank of America here. They reported earnings yesterday, still in a decent technical setup. You've got a 979 swing point here that was probably set around the same time that Morgan Stanley, September 14th. That was the time when most of these financials hit their recent highs. So for Bank of America, 979 here. It's trading at 947. To me, its chart looks a lot better than Morgan Stanley's right now. So we'll see. We'll see about the financials. American Express also reported earnings, sticking in the financial space here. AXP, pretty ugly day of price action here as well. Heavy volume reversal after hitting an intraday high of 58.97. The stock is now down 3% to 57.59, holding right at its 50-day moving average here, 57.46. So only about 13 cents above that 50-day moving average. We just talked about Morgan Stanley. Insurance companies outperforming at one point today, led by pretty decent earnings from Travelers. Let's take a look and see if these gains are still holding. Oh, yeah, Travelers, a nice gap up for the stock today, up 3.7% to 74.03. Earnings were up 181% from a year ago to $2.22 a share. Sales up 2% to $6.5 billion. Travelers, too extended now. Don't want to chase it up here. Recent breakout over 65.72. That was back in early September. Don't chase stocks that have run up too far too quickly. So Travelers extended, and quite a bit of the insurers actually are extended. So I'd be careful about chasing them. We'll be right back, folks.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks. Major averages trying to come off their lows here. The Dow and the S&P 500 have been hanging in there pretty well today. Right now, the Dow is down about 17.5 points, 13,539. S&P 500 down 3.5 points, about 0.2% to 1457. And the NASDAQ Composite lagging, not surprisingly, down 28 points, 0.9% to 3,076. Looks like Google has opened again. Shares right now trading at, let me go ahead and update this chart here. Shares of Google down $55.93, down 7.4% to $699.56. It is now underneath its 50-day moving average at 711. Mentioned earlier in the show that Google's earnings report was mistakenly released in error. It was supposed to come out after the close today. Big questions about the company's cost per click rate in the third quarter. It fell 15% from a year ago. Big miss on the bottom line and top line as well. So I'm sure investors will be asking, investors and analysts will be asking a lot of questions at the company's conference call this afternoon. Let's check in on the NASDAQ 100. Haven't done that yet. We'll see an index here that technically is weak. broke below its 50-day moving average last week. It tried to rally back above it earlier this week, was stopped. It looks like a ceiling now. So again, that's just a technical sign of weakness. Doesn't mean it's destined to live underneath the 50-day moving average for the next several weeks. But NASDAQ 100 definitely looking weak here. It is down 1.1% today to 2745. Economic data earlier today. Weekly jobless claims up 46,000 to 388,000. The estimate was for claims to come in around 360,000, so it was larger than expected. Prior week was revised higher slightly to 342,000 from 339,000. Also got the latest reading from the Philly Fed. The Philly Fed Manufacturing Index rose to 5.7 in October from minus 1.9 in September. That reading was much better than expected, and it was the first positive reading for the index after 5 straight monthly readings that showed contraction. So good news from the Philly Fed earlier today. Taking a look at some other movers here. BIIB, surprising news around Biogen IDEC today. Stock taking a hit, down 2.8% to 149.44. A lot of optimism around the company's BG12 oral MS treatment. It's a potential big market for Biogen, and the drug has performed very, very well in late-stage studies. I've heard really nothing but good things about the drug and that it would be approved by the FDA, but regulators today extended the review date of BG12 by 3 months. I don't think they need more data. Who knows? Maybe they're just backed up. They need more time, but investors took that as potential bad news and are sending shares lower today. Again, down 2.8% to 149.44, sitting right at its 50-day moving average is Biogen IDEC. 877-927-6648. Give me a call. Got a question about a stock, question about the market. Are we in a downtrend? Are we in an uptrend? Should I be aggressively buying stocks here? Let me know. If folks, you want to check out my Ultimate Growth Stocks newsletter, feel free to do that right on the homepage of TFNN.com. You can click on the newsletters tab right on the homepage, then click on investment newsletters, and you can read all about Ultimate Growth Stocks, how I approach the market. 30 days free. You get an extensive weekly update every Tuesday, and then email buy alerts, sell alerts, market updates in between. So feel free to check that out. Let's check in on earnings at Verizon. Verizon was doing well today. Let's see if it's still holding gains. Yeah, nice day for Verizon, up 2.5% to 45.85, enjoying a nice bounce off the 50-day moving average earlier this week, and the numbers were pretty good. Earnings up 14% from a year ago to 64 cents a share, helped by strong wireless growth. Verizon sold 6.9 million smartphones in the third quarter. They activated 3.4 million Android phones and 3.1 million iPhones. Verizon also said it plans to have the 4G LTE network available nationwide in 2013. Good numbers from eBay, or at least a positive response by the market to eBay's numbers. Buyers have been in the stock all day, up 5.4%. Impressive move by eBay to $50.81. Excuse me. This is an interesting move by eBay because the results were mostly in line with expectations, and their outlook was mostly in line with expectations. But the good news, sales at its PayPal unit, the online payment unit, rose 23% from a year ago to $1.37 billion. Market was impressed for that. Revenue at its marketplace unit, including auctions, rose 9% to $1.81 billion. So pretty good results from eBay. You're not looking at big beats and raised guidance from the company, but can't deny the fact that sellers are, buyers, used to saying sellers, but not in eBay. Buyers in the stock in spades today. Shares up 5.4% to 50.81. We've been talking about Polaris Industries, PII. This is really a nicely well-run company here. They make all-terrain recreational utility vehicles. I think they do snowmobiles as well. Kind of a volatile day of trading here. But Polaris making progress, trying to break out over 86.24 here. Stock was recently trading at 88.14, up 3.4% on the day. Earnings up 40% from a year ago to $1.33. The estimate was for $1.20. Sales up 21% to $880 million, and nice guidance from Polaris Industries as well. So the stock is benefiting as a result. But one of the few examples of a successful heavy volume technical breakout. We have to keep in mind, folks, that we are day 4 into excuse me, we are day 4 into a rally attempt for the major averages. We are not in an uptrend yet. It's still a tricky environment for growth stocks. There's been a lot of damage out there, not only in shares of Google and Apple, but you know, there are damaged charts out there, no question about it. Yeah, there are some stocks holding up well. Financials could still lead. The home builders been a nice pocket of strength in the market, but we are in a downtrend here. Only 4 days into a rally attempt, and we're not in a confirmed uptrend yet. So if either tomorrow, sometime next week, we get a big percentage gain, 1.5%, 2% in the major averages, we get volume that comes in higher from the prior session, I'd feel a little more comfortable saying that the trend has turned upward again. But without follow-through, we're still in kind of a treacherous market here. So reason to tread cautiously, don't need to be aggressive here. And let's just leave it at that. Let's take a look at IYT, the iShares Dow Jones Transportation Average Index Fund. It is working on 5 straight gains here, back above its 200-day moving average. So the IYT has come back to life. It's up another 18 cents today to 91.52. This transportation ETF helped by results from Union Pacific. I believe Union Pacific is one of the top weightings in IYT. Union Pacific, after hitting a high of 128.38, it has fallen off its high, but still up 1.6% to 125.68. Pretty decent numbers from the railroad operator earlier today. Earnings up 18% to $2.19 a share. Sales up 5% to $5.34 billion. So, you know, there are some bright spots in the market. No question about it. The home builders, they are off to the races again today. Remember, yesterday we had housing starts and building permit data that came in much better than expected. Here is the home building ETF, the ITB, working on 4 straight gains, up another 1.1% today to 20.86. And when it comes to individual stocks in the group, you know, here's where there's the issue, because you're looking at a lot of stocks that are extended. Here's Ryland Group in a nice little sideways consolidation here, not looking too bad, but you know, this isn't a base breakout here. If it eventually takes out its high set back in here in September, it's kind of too short of a base. So it's a risky buy. Pulte Group, you know, same situation. It recently took out a swing point that was set back here in September, working on 4 straight gains itself. But it just kind of feel like you're chasing the home builders up here. I think they're risky buys. But again, like I mentioned yesterday, they sure are acting well and not showing anything in the way of sell signals. But I've learned a long time ago, you know, it's very risky chasing performance. Follow a good set of rules. That's what I do with the Ultimate Growth Stocks model portfolio. If a stock breaks out from a base and the base is only 2 weeks, 3 weeks, 4 weeks old, I'm not going to buy it. I don't care if the stock goes up. I'm going to follow rules and make sure I focus my buys in bases that are, you know, a minimum of 5 weeks long. Sometimes they're 6, 7, 8 weeks. Sometimes they're longer than that. But breakouts from too short of bases are sometimes prone to failure. Take a look at BCOR. This is a stock it's been kind of off and on my radar. It is a speculative name, but its relative price strength has been impressive. This company used to be known as InfoSpace. Blucora still has a significant search business, but interestingly enough also owns TaxAct, a web-based do-it-yourself tax program that competes with TurboTax. So two seemingly different businesses, but I got to tell you, growth prospects at BCOR are quite good, actually. They're expected to earn 59 cents a share this year, up 79% from 2011, and in 2013 annual earnings should be up 73% from 2012. So there is a good growth story here going on at Blucora. Stock is holding above what looks to be a pretty good resistance level at 1678. Blucora today down 2% to 1772, but continuing to show relative price strength. That is a positive. Another stock showing relative price strength that is impressive is Jazz Pharmaceuticals, down 1.1% today to 57.48. Let's take a look at a weekly chart for Jazz, because it is, well, it's looking kind of jazzy. Let's see here, Jazz Pharmaceuticals, and yeah, you can see a nice breakout right here, and I just love this tight sideways trading here. It's bullish. It indicates good support for the stock. Jazz is under accumulation. Earnings are due on or around November 1st. Could be a little bit before that, could be a little bit after that, but another strong growth of another strong quarter of growth is expected at Jazz, with earnings up 40% to $1.32 a share, sales up 145% to $179.8 million. Sales growth has largely been driven by its flagship drug Xyrem, which is a treatment for narcolepsy, people that fall asleep a lot. So Jazz acting quite well here. This is front and center on my radar. Very, very good bullish technical setup. Some stocks that are looking vulnerable here. And there are plenty of them, no doubt about it. Salesforce.com, CRM. This one was setting up. It is now starting to look a little faulty. It is underneath its 50-day moving average here, down 1.2% today to 149.81. Looked like this was a stock where, a breakout try over 161.90. That was its swing point set here in early September. Was possible, but you see a reversal here. Volume wasn't real heavy on October 5th when it reversed and finished near its session low, but this one's looking a little tired. And the overall tech sentiment right now is very, very shaky. You got these numbers from IBM, you've got these numbers from Google that came out earlier today. Tech definitely looks challenged here, and it is a concern. And I'm trying to stay optimistic about the prospects for more gains between now and the end of the year. But a market rally without tech just doesn't seem likely. So hopefully the news will start to get good in technology. Thank goodness for eBay. Again, what I thought were fairly lukewarm results. I mean, a good quarter, not a great quarter, but a good quarter is fueling a nice rally in eBay today. That definitely the rule, not the exception. Shares of DDD, 3D Systems, this former market leader, also looking vulnerable. Break below its 50-day moving average here in early September. Tries to rally back above the line Tuesday earlier this week and has failed. It is down 3.3% today to 37.67. So 3D Systems, another growth name, looking vulnerable. And how about shares of Zillow? Zillow is another stock that looks like it's breaking down here. Goldman Sachs upgrades it today to buy, or puts a buy rating on it. It's down 2.5% today to 36.99, still holding above its 200-day moving average, but a broken stock for now. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m., and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing on TFNN. Ken Shreve with you. Markets hanging in there, definitely seeing some distribution in the NASDAQ today, not surprising. Actually, distribution has been going on in the markets since late September thereabouts. That's why we are in a downtrend here. 4 days into a rally attempt, but this market is not out of the woods yet. We've got volume on the NASDAQ today tracking about 15% higher than what we saw on Wednesday, and NASDAQ volume on Wednesday was above average at 1.73 billion. So unequivocal distribution on the NASDAQ today. Not so much on the Dow. It's only down about 6 points now to 13,550. NASDAQ down close to 1%. Selling fairly muted in the S&P 500 here, down 3 points to 1457. Yeah, before we went into the break, I was talking about shares of Zillow down 2.5% to 36.99, and what I was trying to say, I don't know that I was clear, was that Goldman Sachs initiated coverage of the online real estate firm today with a buy, and Zillow has been under a lot of pressure lately. There was news of an SEC inquiry about its accounting. It is holding above its 200-day moving average at which is around 36, but Zillow right now trading at 36.99, down at 2.5%. URI, United Rentals, very impressive earnings yesterday. Last check, the stock was holding on to gains, and then some. Impressive price action for United Rentals, up another 1.9% today to $39.98. This is a stock that got hit hard by institutional selling. Pretty much from April all the way till the end of July, it has been in rally mode, but the numbers yesterday from United Rentals were very impressive, as was its outlook, growth prospects this year and next, very, very strong. But earnings yesterday up 47% from a year ago, sales up 71% year over year to just over $1.2 billion. So United Rentals following through today. LinkedIn, another tech name, looking quite vulnerable here. No earnings date here, but it should be on or around November 1st. LinkedIn took out its 50-day moving average last week, hit an intraday low today of 104.47. It is trading up near its session high today, but still down 59 cents to 108.83. LinkedIn definitely looks vulnerable. Checking in on some earnings reports after the close today as we put the finishing touches on Thursday's show. Athena Health. This is a company that provides billing, collections, medical record management software to physician practices. Has been under a lot of selling pressure. Question is, has all the bad news been priced in here? Stock is under a lot of selling pressure today, down 2.5% to 80.32. Earnings expected to be up 8% from a year ago to 26 cents a share. Good top-line growth expected as usual. Sales up 30% to $109.2 million. We're also going to hear from Chipotle. Remember Chipotle? Interesting, a stock that is some 35% off its 52-week high, has just tremendous price destruction in Chipotle as the market frets about growth prospects here. Excellent food. Had been a very well-run company, still is, many will say a well-run company, but a lot of institutional selling in this stock basically since middle of July earlier this year. Chipotle still selling at 35 times trailing earnings and 27 times forward earnings. So still gets a premium multiple, even though it's 34% off its recent high. Earnings expected to be up 21% to $2.30 a share. Sales up 19% to just over $700 million. So we'll see what Chipotle has to say. Also, listen to what Microsoft has to say. They report earnings after the close as well. Have a great rest of the day, folks. Enjoy Tom's show next. I'll see you back here tomorrow, 3 o'clock Eastern, for another edition of Breakout Investing.